getting up there again, $5,200 an ounce. If you've got U.S. stocks futures, they have turned negative now. There's also the news in the last half hour from the FT that JP Morgan is marking down private credit. And then we have ECB speak today, Luis Guindos and Isabel Schnabel both speaking today. More whipsawing in the energy markets. Oil prices.
Inflation news this morning at 8:30. Oil was down from previous years, about the same. The core was down.
However, I know the post was taken.
Barclay was up.
That the U.S. Navy has not exported and taken over a vessel at this time.
Tomorrow we'll be building permits.
Absolutely utilized if when necessary at the appropriate time. Let's bring in Bloomberg's oil reporter Wrong Way Neil in Singapore. So oil down only 20% on the Energy Secretary's incorrect post. Just how fragile is this market right now?
So firstly, I do have to break down why that particular tweet has actually hit the market so much. So Energy Secretary Chris initially erroneously posted a tweet saying that the U.S. Navy has successfully escorted a tanker through the Strait of Hormuz, and that was seen as like if that actually really happened, that would be a huge boost of optimism to oil traders as well to the wider industry at large to show that Strait of Hormuz is now accessible, and that would give that's pretty much a hint that transit through that particular strait could possibly resume, which is why we saw oil prices as much as 20% just based on that tweet alone. However, unfortunately, that tweet has been removed, and the U.S. administration has confirmed that this operation did not actually happen, which of course leaves the wider oil industry and traders alike looking at the ongoing and the policies of where the oil markets health is, which of course what the key issues that we're grappling with is the fact that tankers are still not transiting through the Strait of Hormuz, and Middle Eastern producers are largely affected by the strikes, largely cut production as well, which is leading to market tightness.
Yeah, and then of course we're getting reports that the IEA is posing a record release of reserves. Well, we knew this a little bit anyway, Wrong Way. How will traders take this? Does it need to actually be formally announced? Will it move the market then?
So when word of this this particular consideration was first released this morning during early Asian hours, we've seen oil prices dip quite a fair bit, a few percentage points, and that could show like how the oil market has viewed this news. Of course, they will welcome an additional influx of oil that would help to bolster the ongoing supply risks that the market is facing. But the trading industry they took some time, they digested the news, and they can't realize that even if the IEA went ahead and released the additional haul of oil, that roughly only makes up, by some estimates, that only makes up the shortage that we have faced in the past couple of days during the outbreak of this war. Of course, the release of strategic reserves is only meant to be a temporary relief, and the real indicators, like I mentioned earlier, that the market will keep their eyes peeled on would be on whether tankers can continue to transit through the Strait of Hormuz, as well as how much production has been affected in the Middle East. And as of right now, we are seeing a number of major oil producers facing tremendous cuts due to attacks and damage at their various oil infrastructure.
Bloomberg oil reporter Wrong Way Neil, thanks so much. President Donald Trump has warned Iran against laying mines in the Strait of Hormuz and threatened to blow up any ship attempting to do so. The U.S. Central Command says multiple Iranian naval vessels have now been eliminated, including 16 mine layers near Hormuz. For more, Bloomberg's Jamal Research joins me in Dubai. Talk to us about the confusion over the status of mines in the Strait and how many may have been there already, Jamal.
Yeah, well, you mentioned the word confusion, Bonnie, and this is in reference to a post that President Trump put up overnight, warning the Iranians not to load any mines in the Strait of Hormuz. He then added that there's no sign that they've actually started to do so. And then, of course, a couple of hours later, they found out from Central Command that they had targeted more than a dozen of these mine-carrying vessels that were about to transit through the Strait of Hormuz in anticipation of them actually laying the groundwork for these mines to go off. And so what has happened here is a new maritime front has opened up in this war. Central Command is now going after any of the vessels with main capabilities. Unclear at this point exactly how much stockpile of mines that Iran are sitting on. We were speaking to Becca Wacker, our global defense lead, and she was saying even before the war started, they were estimated to be sitting on around 5,000 mines. But ultimately, it's not operationally difficult for them to load some of these ships with the mines and with the explosives. So that's going to be one issue to contend with, even though the US are committing to send over special forces to help remove the mines that have already been placed in the strait, assuming that they are there. The other point is there are other ways that Iran can also cause disruption throughout the Strait of Hormuz, and some of them include interfering with GPS, with what people are calling spoofing, so sending wrong GPS signals to ships looking to transit. And so there are other ways as well that they could also seek to impact the safe passage of vessels going through the strait, which is why effectively it still remains shut. And we've talked about the massive ramifications that that is having on energy markets, but it's very clear now that from Trump's perspective, they're going to try to do whatever it takes to reopen the strait. But whether it's going to mean to the actual effective safety passageway for vessels and agriculture across the big question.
And then, Giovanna, it's starting to seem like the US is really potentially now working on how to actually end this war, doesn't it?
Well, publicly, they will say no. And I actually had the chance to speak to the former Israeli Prime Minister, saying that's how we got in, that the two sides are still aligned on the objectives of what they're trying to achieve here. But I will say that there's one big difference between US and Israel in terms of public appetite for this war. The broad public in Israel is supportive of the steps that the IDF and Israel have taken. In the US, you're beginning to see more and more public backlash against President Trump, especially with someone scrutiny over the price of oil and what's been happening and how that trickles down to the consumer heading into the midterm elections. And so really, from the perspective of time, President Trump would prefer to see a speedy end to this war. And that also goes back to some of the comments that he made yesterday. And that quote, he thinks the work is mostly complete and that it should take a couple more days for it to wind up. But actually, if you look at what they've been doing on the ground operationally, the last 24 hours for the U.S. Defense Secretary Pete Hegseth have been the most intense yet. The operations continue. And as you were just speaking about, a new front has opened up from a maritime perspective. At the same time, Iran continues to be defiant and continues to strike back at Israel and the Gulf states. As silence once again going off in Bahrain this morning, Saudi Arabia intercepting projectiles over here in the UAE. We were walking in the night with another missile alert coming through. And so Iran continues to fight back and continues to defy the US and continues to say that they are not interested in negotiating at this point in time.
Bloomberg's Giovanna Bersetti in Dubai. Thank you so much. Stocks in Asia gaming for a second day. Let's get an update now from Winnie Su in Hong Kong. Winnie, another great day.
Yeah, morning, Bonnie. As you mentioned, overall, it is lifting sentiment from the drop in the oil price. However, as we mentioned just now, we are seeing gains pairing a bit with these concerns rising around the private credit. However, overall, we are still seeing that tech stocks leading gains in Asia with the better than expected earnings coming through from Oracle and also the latest sales data from TSMC, still both pointing to a solid demand when it comes to AI. And hence, you're seeing that the Taiwanese benchmark here up about 4%, bringing overall gains versus Kospi, the Nikkei both up more than 1%. Now flip the board and take a look at what's going on in the weaker side of tech, which is actually the Chinese.
520.
For example, You're looking at Minimax and Jifu down about 8% and 6% each. And that is coming after our scoop that the Chinese government has now moved to restrict banks and state agencies from using the open call, which is a new AI agent from China, gaining lots of traction right now. But they're citing that they are seeing some security issues. Now, we are also looking at Tencent trimming earlier gains. And if you remember from yesterday, it's quite a reversal because they had that new AI agent really compatible with OpenClaw. And the stocks were actually up yesterday, but now with these uncertainty, you are seeing that the gains trimming here. Now we also want to flip the board and take a quick look at Japan because specifically in the bond space, we did have very solid demand coming through for the 5-year bond option earlier, and hence you're seeing yield falling slightly here, and that is coming after expectations for further rate hikes when it comes to the Bank of Japan, citing that the risks around the Iran war. And in fact, the Bank of Japan governor will also say that this war can pose a big economic impact for the Japanese economy. So that's why you're also seeing a Japanese yen here still at week at 158 against the dollar. Back to you, Bonnie.
Winnie, thank you so much, Winnie Sue there in Hong Kong. Equity indices for ingredients. That's the old way. The new thing is to select equity in. So stocks were getting a lift originally from that report the IEA had the world's largest food reserve release in its history. Investors also looking at the US CPI later today, and of course now we have the idea of the JP Morgan's market.
Excel 43.
So that just predicting its future level. That was boring the earnings so much. It's a
Excel 51.
and my stock is tomorrow fields. Mark the six oil below $90 a barrel. Is that going to continue into today?
I think it'll be that the JP Morgan story overtakes everything actually. If there is a bit more detail coming out by the time we get to the US trading session, that may well be the hottest topic on the mind of investors aside from anything that happens in Iran. So the only thing a bit nervous about some signs that the private credit space is beginning to eat into the mainstream sectors of credit. And if JP Morgan, what the largest bank in America is starting to mark down some of its portfolios, then it will be asking who's next. So it'll be a very big concern for traders when they come into the US time today. The CPI report itself, people are not expecting much of a change. Headlines are coming around about 2.4 again, a year-on-year basis. But with the Federal Reserve meeting next week, the side of the equation that is more sensitive for markets will be if we get an increase. If it's a higher number, people are already fearing that the inflation numbers will get worse because of this higher oil prices that we have, and that they may stick around for a bit longer. In the bond market, they're very becomes a bit sticky. So if we look at a higher CPI prediction today, you're probably going to see the biggest reactions in the bond market, which could then spill back into equities as well, particularly if there's more to the JP Morgan story as well. So all in all, it looks like we're going to have a pretty lively start for American markets today. On top of all of that, of course, on Iran as well. For the time being, that situation is still very fluid, as Winnie was saying earlier. That
Trade cell 181.
The oil moving through those straits and how it affects short-term prices. It seems an incredible volatility. Today, oil prices started to recover at the beginning of the day, then they subsided again. So plenty of volatility still to come in that space with or without the CPI report.
Yeah, absolutely. It's going to be one major day. Let's go that way. And like started with Mark Townfield and Singapore. Thank you so much. So we're going to discuss the impact of the disruption of the Strait of Hormuz on global shipping. But first, Oracle jumps in post-market trading just weeks after being caught in the so-called AI scare trade. We'll discuss results next. This is Bloomberg. Welcome back to Big Play. Europe, Oracle shares gaining almost 10% in extended trading after the company posted strong results and gave an outlook suggesting there's little let up in demand for AI computing. Bloomberg senior strategist Neil Camping is here now. So Neil's good results for Oracle this week after the report from the expert theory. What is happening right next? What will the market be able to play around?
I think there's something very wrong in the release. The good thing is with AI acceleration, the Oracle Cloud is growing at a very fast clip. So there's there in terms of the absolute number. I think the real relief is the fact that in contrast to the article that they didn't increase CapEx again. So the CapEx and the commitment to what they've got in terms of things is very strong. And I think that the benefits there is certainly a relief that they did raise CapEx unlike recent peers in recent weeks. So it's certainly a relief there. The stock also is down 50% from where it was sort of coming from the previous quarter. So there's certainly an element there. But whether it's actually increase the momentum from here is less likely, I think, because whilst they said they won't raise more debt, they have effectively said that they could potentially raise more equity. That might be a cap on the relief.
It might. Now, speaking of debt, we're seeing huge raises once again. You know, Amazon with an 11 part offering, and so is Europe as soon as today, potentially.
Yeah.
Also, you know, companies as well. This is continuing here.
Absolutely. So there's obviously appetite in the debt markets for these offerings. And of course, with these tech companies, they're very stable in terms of the long-term contracts and commitments. There's a big difference between Amazon and Oracle's balance sheet. Amazon's leverage, net debt to EBITDA, is 0.3 times. It's very low. Oracle's, in contrast, is 4 times. So whilst big demand for these offerings, there are different profiles in terms of their credit ratings and in terms of the balance sheets. And Meta as well was $125 billion of demand for their offering recently, and they have basically no leverage on the balance sheet.
Now, something slightly separate that brings China back into the equation. So OpenClaw was developed by an Austrian, he now works at OpenAI, but China, when it got its hand on it, went nuts for it. Chinese companies made tools that were compatible with it. You had to have it. The lobster signal was everywhere, right? Now China has suddenly got cold feet. What is going on here?
So I think if we think about the Chinese in terms of restrictions on data, I think the biggest concern with they is about that fully open source system. And when it's fully open source, it's more difficult to
Trade cell 28.
to the data that it tries to extract from these models compared to some of the US peers. So Beijing is trying to put, I think, a lid, if you like, on some of the data that can be used for these kind of models, which of course, for them to work, you have to have access to the data. So I think that's the big difference. But they still remain somewhat behind some of the US peers. But I think what you'll see with some big companies like Tencent is that there's been huge advances and you must them too quick and need some sort of oversight and regulation potentially.
Telling a state banks and many government agencies to stop running the tools that would help them maybe organize their email or do other things. Senior strategist Neil Camping, thank you so much for all of the context. Coming up, Blackstone President John Gray says he believes the war-induced market volatility will be temporary. More from our exclusive interview next. This is Bloomberg.
Trade cell 33.
So Bloomberg that the market chaos triggered by the Iran war will probably be temporary. John Gray also told us that he doesn't expect the conflict to bring dealmaking to a complete standstill. This is speaking exclusively with Bloomberg's Lucy Maplot.
I think for us, we tend to take a longer term view. I mean, obviously in the near term, if you're trying to get an IPO done or transaction,
Trade cell 24.
this volatility plays through. But what we've learned over time, and you saw this last year with Liberation Day, you saw this with COVID in the past, that you don't want to be too quick because these things can settle. And I think in this case, the war will settle. And then what comes back is the focus on the main thing. And of course, the main thing today is what's happening in AI, this enormous investment that's going on there. the productivity gains, some of the issues around disruption. So near term, I think it slows things, but then I think we revert back to sort of underlying fundamentals, also a healthy economy and inflation falling, which should allow transaction activity to pick up. Near term, a little foggier, but I think the outlook after this is probably pretty good.
But could you see deals at more or less a standstill for the next 6 months as we try to figure out what happens to the price of oil?
No, I don't think so. I mean, you look at the price of oil and in a given day, I guess yesterday moved $30. I think, again, once the conflict settles, I think oil prices move back down. And what will matter more then is, hey, companies' earnings are growing strongly. Inflation is heading down. The Fed is likely to cut rates, and we should see a pickup in transaction activity. Now, I think the area that will be tougher is those areas perceived as being more vulnerable to disruption. That'll be more challenging. But we have a couple businesses we took public at the end of last year: Medline and Hospital Supplies, Legence and Energy Management. These stocks are up, 50, 80%. Because they continue to grow and the market's looking for sort of terra firma companies they feel good about longer term. And I think that desire for those kind of businesses and those businesses that benefit from AI will continue. So I view this more of as a pause as opposed to something that's longer in nature.
Blackstone President John Gray speaking exclusively to us for an upcoming podcast series, Leaders with Francine Lacroix, which launches on Monday. Now, some of the top stories we're following this morning. The ECB president says she'll do whatever is necessary to ensure the war in Iran doesn't inflict the same inflation pain as Russia's invasion of Ukraine did. In an interview on French television, Christine Lagarde said the euro area is in a better economic situation and has greater capacity to absorb shocks. North Korea has test-fired cruise missiles from its latest warship. The second time in a week, it has launched its new sea-to-surface weapons system. This as reports grow that the U.S. is shifting air defense assets out of South Korea to help it fight Iran. A photo released by state media showed Kim Jong-un overseeing the test on TV, accompanied by his daughter. Two more Iranian footballers have claimed asylum in Australia shortly before they were due to fly back after playing in the Women's Asian Cup. Australia had already granted asylum to 5 of the 13-member squad. It's feared the players could face reprisals at home for refusing to sing the Iranian national anthem before a march last week. Coming up, as ships continue to avoid the Strait of Hormuz, we'll discuss the impact on global shipping. This is the break. Live from London, this is Bloomberg Daybreak. You're up by Bonnie Quinn with your top stories. Record release. Crude whipsaws near $88 a barrel. Reports the IEA is proposing its biggest ever release of oil to tackle soaring prices. The U.S. says it's destroyed multiple Iranian naval vessels as President Trump warns Iran not to lay mines in the Strait of Hormuz. Plus, Oracle sees the future. Shares gain after hours as the software company predicts AI demand will grow revenues faster than expected. Let's take a look at these markets then, because the president obviously trying to continue to convince the market that oil disruption risk is transitory. Penny McCroft of RBC among those saying, look, we remain wary of mission accomplished declarations. We're expecting higher prices for longer. Traders are pricing options for late May that show that. And we still don't have the IEA release officially, right? We don't know how many tranches will be in, whether it's on immediately, and how long it will last for. And even as all of that is happening, we're still getting more and more shut-ins and partial shutdowns. We're at 6% of global oil supply now shut in effectively. So as you can imagine, Brent crude hasn't really been moving on these latest headlines. It did move yesterday, we'll get to that in a moment, but still below $88 a barrel now. Gold is rising about $5,200 an ounce, and a slight bit of relief for the dollar index once again today. In terms of futures, we have those headlines playing around now with the headline from the FT that JP Morgan has been marking down private credit portfolios. That led to a little fear into this party, no doubt. S&P futures will remain a little higher, essentially because Oracle also won over the hearts of investors after hours yesterday. After Bitcoin's jump yesterday, we are seeing that pull back just a little bit as well. And Europe looks to perhaps a weaker open as well. Time now, though, for your front page news. And that story, the Financial Times reporting that JP Morgan told private credit lenders that it marked down the value of some loans, clamping down on its lending as worries mount over credit quality. The devalued loans are to software companies, the FT says, a sector that's been in the spotlight in recent weeks. Jamie Dimon says it's a preemptive move. The Wall Street Journal reporting on the emergency and the emerging differences even between the US and Israel in the Iran war, with the headline, Trump says the Iran war is nearly won, but Israel has other ideas. And the Guardian leading with a different angle on the Iran war, saying the hasty redeployment of US missiles from South Korea into the Middle East leaves Seoul ruffled. South Korea's president is now seeking to reassure the public that the country is able to deter threats from the north. And you can get a roundup of the stories you need to get your day going. In today's edition of Daybreak, Taco subscribers can go today. All right, just want to bring you a little bit of breaking earnings news now. We have Intertex out with earnings. It is a narrow beat, fourth quarter EBIT at 2.054 billion euros, and that beats the 2.02 billion euros that the market was expecting. We're also getting Rheinmetall sales out 9.9 billion euros, and it's forecast is for 14.5 billion euros. It actually misses the full year operating profit coming out at $1.84 billion, the operating margin at 18.5%. All right, let's get back to the war in Iran. Now we're joined by Louisa Buckner, Senior Maritime Intelligence Analyst at the Maritime AI company Windward, to the straight for news. So, we know that there are very few ships transiting the Strait of Hormuz, and those who are doing so in the dark. What kind of risk are they taking? Well, at the moment, the advice from the Combined Maritime Historic Information Centre is that you do so at your own risk, and I think the insurance, putting these deals together is enormously complex, and it just doesn't involve a ship owner having the appetite or sending debt through. And she was signing off the cargo of the bank signing off the deal, and so it's tremendously complex. Yeah, you wonder how long these ships could stay anchored outside or at the edge of the strait, right? I mean, are they getting supplies to continue? And they didn't expect to be on their ships so long, so that's a curiosity as well. And also this idea that the president is going to have some mechanism to help insure these ships. Do we know anything about whether that's kicked into gear or if anyone's actually using it? No, there's been very few details emerging about the marine insurance, and of course, it's the attitude of the marine insurance and the inability to guarantee a safe transit of these vessels that has resulted in hundreds of ships now stuck there. There are 20,000 seafarers estimated to be trapped in there. Many of these vessels have had to renegotiate insurance at higher rates. Freight rates for a very large crude carrier, for example, are at as high as $770,000 per day, and that just reflects these enormous freight insurance costs if vessels are to take the risk. But the advice from the maritime sector is that vessels do so at their own risk, and only very recently we've had reports that another ship has been hit
first in 72 hours. I think that's the 11th or the 12th tanker. So certainly that is going to rein in appetite, even from the very small number of ships that have shown their willingness to go through, five or six in the last couple of days.
And a couple of those are probably Iranian. We're also seeing those massive clusters around the Strait of Hormuz in that chart that we showed there, but some of that is just signal jamming, so we don't quite know exactly how many ships are there. Is the IRGC laying mines under the strait, and the mines that were laid after 1979, could they possibly also be reactivated?
I don't think we're going to be certain about that as yet. That's a very good question. What I think is probably likely to emerge in the coming days is we're probably going to see a situation evolve like we did in the Red Sea, where the Houthis sort of gave a free pass to Russia and China in order to allow them to safely transit the passage. And I think what will emerge, if or when more ships decide to take the risk of getting through, is that they're probably going to be China affiliated, or at least have no Western affiliation. That's certainly what we're seeing now with messages that have been displayed by vessels AIS, pointing out the fact that they're China's crew, there are Iraqis on board, certainly trying to ensure that they are not a target, even though so far the attacks on the tankers and other ships have been quite indiscriminate.
Yeah, one tanker emerged yesterday, 100 nautical miles from India, and it was an EU-owned Suez-Max tanker. So you have to wonder how they got through and whether they just took it on themselves to make a break for it. I want to ask you about France planning to mobilise a joint maritime mission. Now, Macron says it's going to be for after the hottest phase of the conflict. I mean, Michelle, how does he know when that's going to be? Iran seems to be only now defending the Strait of Hormuz in earnest.
Yeah, to be fair, I think the situation is so fluid that nobody really knows for sure. And as I said earlier, the attacks are not targeted, they're indiscriminate. So it really is a situation where, certainly as an analyst, I really can't look 24 hours ahead. And I don't think very many people can make any forecasts about where this is going to go.
And then just briefly, the US saying that it will accompany tankers. It said that a couple of times, hasn't done so yet. Could it? Would it be a possibility?
Well, the industry view so far is that this would be extremely resource intensive, and there has been signals said that those assets are not going to be available yet. And concerns, of course, about whether or not there is a safety guarantee. Most shipowners will not put them in that position, and certainly unless marine insurers are prepared to insure the vessel, and there can be some guarantees on safety provided, then naval escorts or not, I don't think there's really an appetite out there for amongst shipowners to really even attempt to transit beyond those very few high risk appetite that shipowners like we saw with the Greek shipowner yesterday.
Yeah. All right, Michelle, thank you so much. Michelle Wiesebachmann, Senior Maritime Analyst at Windward. The US military campaign in Iran is beginning to show signs of strain. That's the subject of today's Bloomberg Big Take, which says Iran has an arsenal of missiles and drones unlike anything the US has ever faced. Joining us now is Becca Wasser, Defense Lead at Bloomberg Economics. So, Becca, a little surprising perhaps, although there were warnings before the US started striking Iran. How sustainable is this pace for the United States, given the rate at which particularly the high-end interceptors are being used?
The United States has struck Iran with such intensity, particularly in the early days of the campaign, that intensity is continuing. And that means that the United States is burning through not only those critical air defense interceptors that we hear so much about, but some of these higher end long range munitions that are incredibly expensive and limited. And so you've seen this high rate. The Pentagon has reportedly estimated that just in the first 2 days of the conflict alone, it went through about $5.6 billion worth of missiles. The problem is in order to replenish these, it takes years. The US is trying to quadruple some of its production of most, in demand missiles and munitions, but that's not going to come online until the 2030s. So right now, there's a longer term gap that might be occurring as the United States tries to ramp up production and replenish what has already been spent.
We were just talking about mines in the Strait for weeks. Of course, Trump has threatened to blow up ships that try to lay more mines. What we know about what's already down there and how fast the IRGC could get new mines into the Strait.
Iran has a number of capabilities to get mines in the Strait. It's not necessarily some of this more advanced equipment or some of these advanced mine laying vessels that they need. They can have small boats, some of the small fast attack boats that they have. They can use those to carry mines and place them throughout the Strait. So it is an opportunity for Iran to be able to disrupt commercial shipping even further, and to try and extract as much cost as possible from the United States and the global commons.
Can I ask you about Israel's defense budget? It's raising its budget by $13 billion. How far will that go, and how significant is it in terms of military spending? If you could put it into context for us, that would be amazing.
So Israel has done several rounds of raising its defense budget in order to pay for its various war efforts. But I think this is part and parcel of the broader trend that we're seeing. Right now, we have Israel announcing its new budget measures that come on top of previous austerity measures. You have the United States announcing a supplemental funding bill to pay for additional munitions. And you're also, in the longer term, going to see some increased military spending from the Gulf states as they try to replenish some of the air defense interceptors that they have expended in this conflict, as well as the potential for other new capabilities. So I think we're seeing in the Middle East, as a result of this conflict and others, there is going to be a ramp up in military spending, and that's going to have additional budgetary pressures for all of these countries.
But fascinating thing that's emerging here is that Ukraine has a growing drone industry, right? And these are drones that can be made for, $1,000 to $15,000, as opposed to the hundreds of thousands of dollars for the interceptors that the US uses. Will Ukraine export some of these to Gulf states, perhaps? And would it cause Ukraine to be, lacking then inventory-wise?
I think for Ukraine right now, the leadership sees this as a potential boon. It allows for them to ramp up their domestic defense industry. It creates potential customers. It creates additional funding for them to be able to continue to fund their war effort against Russia's aggression. So for Ukraine, it is seen as largely a good thing, but there is the risk that it leaves Ukraine running a little bit low on some of those interceptor drones that it's used to great effect. The other part is Ukraine has limited manpower, and it's not just selling equipment, it's often providing the training and the forces to teach others how to use it. And right now, manpower is not what Ukraine has to provide, and have the risk potentially losing any more than what it already has. So there is a little bit of a positive side of the ledger, as well as some potential risks for Ukraine.
Yeah, that is a brilliant point. I was so surprised to see that literally just in February, Ukrainian interceptors down 70% of the Shaheeds overachieved. So they very much work. Becca, thank you so much. Becca Watson, defense lead for Bloomberg Analytics. Coming up, Ryan Mattel reports earnings. We'll unpack from next. This is Bloomberg.
Coffee is making it toast. With a trusted brand, parents choose most. Coffee is with green beans, parents, spinach, unite. All these veggies with the love of mine. That's happy.
Sorry, lawyer after an accident. You make a video with this.
Welcome back to the Break Europe. Now, some cold breaking news. Nintendo shares gained as much as 10% in their steepest climb since April, as the surprise success of its new Pokemon game helped offset rising memory costs. Physical copies of Pokemon Pocopia have sold out at several major retailers in the United States. Nintendo shares are still down almost 30% from their November peak. Boeing shares fell after it said a wing flaw found on its 737 MAX will delay some deliveries of the cash cow narrow-body jet. The US playmaker says its overall delivery target of roughly 500 jets for the year remains unchanged, despite the quality lapse. The US Federal Aviation Administration said it's investigating the issue. And staying with Boeing, we're told the company has a new contract worth almost $300 million with Israel to deliver as many as 5,000 new air-launched smart bombs. The company's small diameter bomb is a guided munition that can be launched at targets more than 60 kilometers away. The new contract is not related to the ongoing strikes on Iran, with deliveries not scheduled to start for around 3 years. And I just want to get back to those Rheinmetall earnings because we did see a miss on many of those metrics, according to Rheinmetall, when it came in with earnings just a little bit earlier. Let's get to Oliver Crook now for some of the details. He's our chief Europe correspondent. So, Ollie, what will the reaction to the earnings be in the market?
Yeah, well, the issue is that it's very hard to figure out what the reaction is going to be within the market because there's so much sort of expectation that's built into Rheinmetall earnings. So sometimes they'll release something that looks pretty good, but again, the market was somewhere else. I'll just take you through some of the highlights of what we've seen so far from Rheinmetall for their full year and what they've cast into 2026. So their margins, full year operating margins came in at 18.5%. That beat the estimate of 18%. When they're looking further into the year, they're seeing that those margins are going to come right up to 19%. That is broadly in line with the estimates for what analysts are expecting in 2026 at about 19.1%. Now, sales in 2026, they're expecting those to increase. That is coming in a little bit shyer than had been estimated. They're expecting their sales to be 14 to 14.5 billion euros. The estimates for closer to 15, so a slight miss there. That being said, Bonnie, we're talking about an increase of sales of about 40 to 45%. So even if it is slightly a miss, this is still a very bullish story for Rheinmetall. Their dividend also beating what the anticipation was. The anticipation was for 10 euros 33. That came in at 11.50. We're going through all of these numbers in sort of great detail, but again, the headline here is there is structural demand here at Rheinmetall. You just look at what their order backlog book is for the end of the year this year, and it's 64 billion euros. That is an increase from 47 billion last year. So the contractor in Germany, Hensoldt, just after the war began, they said that they don't know how in God's name, that's a direct quote, they're going to meet all the demand that they're going to be getting.
Well, yeah, and I know that Bloomberg Economics is looking for the weapons and ammunition segment to really drive earnings. But elsewhere in German earnings, Porsche missing big in its latest results.
Yeah, it's really the tale of two sort of industrial stories in Germany where you have the sort of auto market really severely declining while defense is elevating up. I mean, we got the VW earnings yesterday, and it was, again, a very sort of tough moment here for the auto space within Germany. Sales in China down 6%. That's down to some of the issues of global competition, but also the Chinese economy never really sort of fully bouncing back from the housing crisis. Of course, tariffs in the United States, that meant last year Volkswagen lost 12% of sales in the United States. And for Porsche, we're talking about a margin last year, Bonnie, of 1.1%. That is close to zero for a sports car maker. That is something that you expect to be closer to the sort of 15% range. And now we're just expecting it to come in for this year only at 2%. To give you a contrast, in 2024, margins for Porsche were at 14%. So again, this has been a sort of story of slowly eroding for Porsche, and something that has been very, very difficult. We're talking also potentially here about potentially further cost cuts. This was one of the big themes of Volkswagen yesterday. The CEO now saying that he's going to enter into discussions with these sort of labor unions. This could also mean more job cuts over at Porsche. So again, a very difficult time for the German auto industry. They're really trying to project that this is the year that you reach the bottom. But again, we'll have to see, Bonnie.
All right, Ollie, thank you so much. That is Bloomberg's chief Europe correspondent, Oliver Crook. Any more coming up? This is the kick.
Die Vereinigten Staaten